What's up, everybody? What's up? Good afternoon. Good afternoon. Interesting trading session today. All right, let's just jump in. I'm in Long Island right now. I gotta get back to Manhattan at some point this afternoon. So let's jump right in. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position update, very notably out of my shorts now. Kind of got out at lows, which is nice, and then the market rounded up. Got the move I was looking for. They did not make those trades easy. A lot of work for making a little bit of money, but they served their purpose. Got back into Google. I'm very small in it. I got back into Apple and Amazon, but I sold them into the up move this afternoon, and I took on a little bit of biotech exposure to see if this rotation that I'm looking for continues through this month and into early next year. RXRX, it's a Kathy Wood name. I usually don't really do too much in terms of individual biotech exposure because the names always make me nervous, but I think that we might be able to continue to round up on some of those names. All right, let's jump in to the charts. SPYs here are down 0.6%. The Qs are down a full percentage point, and here's the banger. IWM is up a full percentage point. So look at that. We got the Qs down a full percent, we got the IWM up a full percent, and we have the SPYs down 0.6%, but the RSP, the equal weighted S&P, closed exactly flat. So what does this mean? It means that there was a lot of rotation today. Some dispersion perhaps in the opposite direction of what we have seen for, well, a lot of the past few months. And I don't know about you guys, but I've been looking for it. I know I've been talking about it. I've been looking for it. Ever since TLT started to move higher, I thought that we would start to see some mean reversion with the IWM playing catch-up, and it was such a strong month in November, and we didn't really get that until really kind of last week. I remember there was relative strength on this push through failure day on the 29th, but the market was weak that day, and we couldn't just, kind of break out of this wedge. It was like a false breakout, and then we had the real breakout of this daily chart wedge in the IWM that got us back above the 200-day with some serious authority, big volume, positive Maribozu. That was on Friday. Some real rotation there. And the Qs had an inside day. I think it's an inside day on Friday, right? Yeah, inside day by a penny on Friday, which obviously represents relative weakness when you look at the IWM's candle. I don't remember the exact percentages. The different indices were up, but the Qs on the intraday on Friday basically did kind of nothing all day, rounded up a little bit, but compare that intraday price action to what the IWM did on Friday. Just a massive, insane uptrend, which actually continued to 187 today. It was actually at 187 that I said that this market might begin to start looking a little bit extremely extended for the IWM, but it's not a trend that I want to jump in front of. If anything, thanks, Dave. Dave mentioned that the Qs were up 0.3% and the IWM was up about 2.8% on Friday. Yeah, it's insane. And then we got further continuation on that today. So yeah, the IWM is actually starting to approach some extreme extension here. If we get a little more continuation on it tomorrow in that day 3, maybe some people could actually look the other way. But I'm looking for continued rotation here. Dave also providing this Russell versus QQQ chart, which is a really good chart, and it can really show you just how big that deviance has been. And this is just thus far an uptick. If you wanted to analyze the technicals, and I've got it up on my other screen here, if you wanted to analyze the technicals of that Russell versus NASDAQ chart, we haven't even really broken back above any major levels yet, which is impressive considering how strong these last 2 days were for the IWM. But yeah, all the same, really impressive rotation there, and it's what we've been looking for, and we'll see if that can continue here in the month of November. I remember reading a Goldman note, I think it was early last week, where the note was saying that they thought that the rotation would begin in December. I actually was more thinking that this would be an early 2024 story once we get through tax loss harvesting, because a lot of these IWM names are the weakest names that are out there. But so far, Goldman is right, and this was a really big up move here in the IWM over the course of the last 2 trading sessions. So yeah, let's go back over to the SPYs and the Qs and take a look at those daily charts. The SPYs ticked below Friday's low today, which was a little bit dangerous, but managed to close back above it. Friday's a breakout candle for the SPYs and for the IWM, not for the Qs. Obviously, it was led by the IWM, and if anything, the SPYs were held down by the big cap tech stocks, both on Friday and today. So if you lost on a closing basis, and we lost a little bit on an intraday basis, if you lost on a closing basis Friday's low today, it would be another potential false breakout, which would kind of be the third one that we've had over the course of the last few weeks, which has made sense. You know, we know the flows haven't been supportive. Our daily chart was very extended from the 21 EMA. It's very extended on the weekly chart. All the same, though, I was forced to stop myself out of about 2/3 of my UPRO position, which I had on as a short for the market, when we broke out on Friday above Wednesday's high. So I liquidated about 2/3 of that position up there, and the remaining 1/3 actually liquidated into this down move today as I pulled back my expectations for a price correction on this market, because, you know, I have to manage risk, and the market was breaking out. Is it possible that it's a shakeout and the SPYs still pull back to like 450 like I was looking for? Absolutely, it's possible, but again, we broke out on Friday. Risk management is the key in this business. I held on to that trade as long as I could. I traded it well. I finished positive in it, and I'm out of it. I am also now out of my QQQ short. This one actually did hit my target, though. We had discussed looking for a move basically to like the 382 to 383 area. Low of the day today is 382.66. So I liquidated my TQQQ position a little bit above lows, which was nice. So I got exactly what I was looking for out of this one, and this was a tough trade. I've been short TQQQ since November 3rd. I closed out of it with positive P&L. So considering when I started shorting it at like $37 or so probably, and I liquidated the position at 42, you know, $5 against me to finish positive, it means that I had a good game plan with good trade management, and I was able to follow that game plan with some discipline. So that actually worked out really well, and it accomplished exactly what I wanted it to accomplish. So I'm all out of my shorts right now, though we did have a cute short in coin today that actually made money after I gave a whole morning meeting about how this is the hard money and we should be careful about shorting these names, blah, blah, blah. You know, talking about the experience that I had on the 28th where I battled the heck out of the stock for no gain and no loss and a ton of risk. But Pat was all over this short today. I don't remember where I shorted it. Yeah, it was really... Did this make a new high? So the high was 146.30, and this high was 146.29. I think we started to short it a little bit before that. I remember. Oh yeah, it was when it poked through 145 and came back down on this inside and up that looked like it was kind of failing. I think it's when Pat first called out that he was shorting some back through 145. I joined him on it. We traded a little bit differently. I think he was keeping a tighter stop loss above 145. I was kind of giving it to highs, so I actually added on the way up towards highs. Luckily, it did not break highs by 2 cents up there, and that is luck. So you have a little bit of a double top here. Then this thing, you know, broke down really hard. I was all out by 141. I think Pat was a little bit greedier than I was. He got stopped out the first time, but found a way to be able to re-enter. So great call out there. Good patience, good trade. Pat is the patient counter trend master. I'm actually trying to avoid these trades. I think I do them a little bit too often, but it worked today, so I don't know. It is what it is. I still don't think it's the easy money. I remember joking on this inside 5 and up. I was like, I really want to be short this stock, but part of me wants to just go long on the inside 5 and up just to prove how much easier it is to be with trend and with momentum than counter trend and counter momentum. That's obviously, you know, buying like $145 with the ADMA being at 125. That's just not how I trade. I'm really not a momentum scalper like that. Some people can do it well. I struggle with that style of trading personally. So yeah, that was that. Also talked about this morning, you know, in the morning meeting, we were looking for continued rotation. So I said, I have an interest in Apple and Amazon and Google and Microsoft, but I really want to be super patient on these. And I was. Perhaps I was a little bit too patient and not aggressive enough, because I ended up getting, you know, good execution on most of these names. Google, I probably started a little bit too early. I bought a feeler position at 130, added at 129, added at 128. The 128 buy obviously worked pretty well. Apple was being just really, really patient. I bought a small amount at 188, liquidated it into the up move. Amazon, I was also trying to be really patient. I bought some, I think around 143. Yeah, I bought some at 143 in Amazon, and then kind of liquidated that position into the close. I got almost $2 out of it. So yeah, some good but small trades. You know, it's like I've been saying, big picture, I really don't like shorting these Apples and Amazons and Microsofts of the world. I get it. It's a crowded trade. I get it. You could look for a deeper pullback in them. For me, I would rather not fight these behemoths. I would rather not fight the massive buybacks. I would rather, instead of, you know, shorting and trying to capture the dip, actually buy the dip on the way down. But I did feel that there was potential that this QQQ weakness and rotation could continue a little bit further, so I was trying to be so patient. But then here at the end of the day, you know, you've got great continuation on the IWM. It's not, at one point today I thought it was going to be just a bullish consolidation day. It's really not. It's just great continuation. And the Qs, for as much as we did see rotation today and the NASDAQ closed down 1%, there's a nice little kind of bottoming tail in the Qs here into the 21 EMA that held support. That you know, 382 area held support, held gap support. So the market still looks great. I would have liked, honestly, an even bigger dip in the Qs to be a bit more aggressive. Upper 370s to 380, I think, would be more ideal, and then I would maybe look to get a little bit more aggressive at that point in some of these FANG names. But whatever, they turn into cute little trades and they put some lunch money in my pocket. So that is pretty much all I have for you guys. That's all I got for you guys. I'm happy to answer any questions that you may have. So feel free to put your questions into the virtual trading floor. I'm going to log into YouTube at the same time, see what's going on over there. Alright, so we got a question on YouTube from Alan Green. What are your thoughts on gold future short squeeze Sunday night? Has anyone heard info on what's getting squeezed, on who is getting squeezed in the Asian market? I don't know what's going on with gold. Someone pointed out to me that the GLD ETF fully reversed the huge move that it had on Friday, which is obviously on the bearish side of things. So if there was a short squeeze on Sunday night, you'd have to see that in a chart of the futures market for gold, I assume, which I don't have access to. But at this point, at least, if there was a short squeeze, it's rolled all the way down and has failed. As far as what's going on overseas in the Asian session, I don't know. I did see, like, a week or two ago, there was data coming out that there was a lot of Asia gold buyers that were coming into the market. Chinese buyers, I think, in particular, of gold that were coming into the market. That info is a little bit old now. I don't remember if it's 1 or 2 or even 3 weeks ago at this point, because I really don't follow these commodities tick by tick, unless all of a sudden something's piquing my interest and I'm taking a trade in it. So I don't really have any other info for you beyond that. Friday is a beautiful Maribozu. It's kind of like I was just saying with the SPYs, but this actually failed. Friday's a beautiful, positive breakout Maribozu in this GLD. and now you closed below the low of Friday's candle, that usually means that that run is at esteem. Futures squeezed from 29.90 to 21 something. It's being blocked by my screen, so I can't read that number. In an hour since you don't have a futures chart. Oh, okay. So it looks like there's a big move in a short period of time. Yeah, I didn't see it. First I'm hearing of it. I appreciate the information. The following liquidation sell-off into today was vicious. I am sure this was the work of the financial stability desks at central banks. Peter Hambro has talked about their gold market rigging and control. Yeah, honestly, outside of my information set, most of the information here that you're providing and that's coming from your question. So I appreciate you providing the information, because I love to know as much as I can always. But I really have very minimal feedback for you on it, because it has not been something that I've been overly following. But I appreciate the question all the same. Dave's also giving me this gold chart. I'm assuming that's the squeeze there. Wow. I mean, that looks like, now that I'm seeing the chart here that Dave posted in the VTF, it looks like upside capitulation of some sort. And that could be a short squeeze, or, you know, buyer panic basically coming in, and now it's totally failed there. Cool. From the high was 21.52 at 6:50 p.m. Thanks. Also from Dave in the VTF, the ADMA and the Qs was touched to pretty much the penny today, before giving a great move down over the next hour. I assume you're talking about the daily chart. You mean a great move up over the next hour after it touched that low? I wanted to know if there is anything you can see to do here from the risk side of things. If the ADMA is an entry, then where the stop could be placed. You're looking at a 5-minute chart at 10 a.m. Okay, got it. Yeah, so I love this trade. This is very much a trade. I mean, this is a bear flag. This is a bear flag with the flagpole being the gap. And you got a lot of opening downside extension here because the gap is so big. How does extension get satisfied? Through time or price. This is a time correction that goes for 40 minutes. A time correction is a flag. This is a bear flag, right? So when do flags typically give continuation? They give continuation as the ADMA catches up. This is textbook here. This is textbook gap continuation. So I like this trade a lot. Basically, the trade is, as the ADMA catches up, you need to watch for a signal. So you got an uptick here at 10 a.m. That uptick continues into the 10:05 bar, right into that ADMA. I do not think that you short at a moving average ever. I don't think that you put a stop loss at a moving average ever. These moving averages are tools to help you analyze the price action. They're timing tools. They're equilibrium tools. And it helps with the timing here. That ADMA catches up perfect, and then you get continuation. So your signal is that probably by the time this is trading back through 386, you go, oh, there's a little bit of an upside tail that's forming here, a little bit of a failure into this ADMA that's below the opening high, and then you could, if you're patient, you're probably having to wait until this 5-minute bar closes, and that confirms that this looks like a pivot into that moving average. If you're more aggressive, you could probably be shorting through 386, utilizing either the high of that bar or the high of the day as your stop loss, and then you get continuation on it. I love it. It's basic bull flag, bear flag, but with the gap of being the flagpole itself. So it's definitely a type of setup and a type of chart that I like. Thanks, Dave. What else, guys? Any other questions? China, Varun, just with a one-word question. He wants me to tell what do you want to know about China? The food. The food's great. Yeah. So yin is the 3x bull one, right? I always forget which is which. Oh, they didn't buy this one up as well as they bought some of the other ones up. I mean, look, there's a big wall there. There's a big wall in China. See what's back down to these levels. So, I mean, sorry, yin. You always have to be really careful, I think, especially with any levered ETFs, because I think that the biggest factor in the China trade right now is time. I'm bullish on China, I really am, but I think that it needs time. I think it might be an early 2024 story. I think we might have to get through some tax loss harvesting, whatever. I'm encouraged by the fact that Alibaba and JD, they've been more my focus, especially JD. They've gapped down like 4 days in a row, but intraday that gap has gotten bought up every day. So I think that it's time that I need more than anything, and to manage my position over time. The problem with that same thought process with a yin, honestly, is that it's a leveraged ETF. So you're dealing with decay at the same time as you're waiting. And if you need time, then decay is a problem. So, I don't know. I'm bullish on China, kind of big picture. They got a lot of work that they need to do. I could easily be wrong. But these names are super cheap at this point. I think they're super cheap for a reason. Everybody is down and out on the China trade. I feel like sentiment on it is extremely poor. And, you know, again, on an intraday basis, for me, the way I've been able to manage Baba the last few days, you know, I bought it on the 30th. I kept it. It gapped down really big. I bought it versus 72. I kept it. It closed out great during the day, back at 74. I was green in it. Gapped down again this morning. I added versus that low, and it snapped back up intraday. I was able to sell some, but I didn't get quite the strength that I was looking for in it. So we'll see. Is the trade over in the consumer staples? It's been a big move, I think, especially if you look at like a Macy's. Walmart's been getting trashed. I don't trade these as much. They're kind of boring. I know retail's been absolutely on fire. I've been out of this BYON for like 3 points now or more. And it just keeps going and going and going. Total squeeze game. I mean, Macy's gave another green day today. It seems like it's starting to get a little bit silly. Nordstrom continuing to grind up also. But again, this is the rotation that I've been kind of looking for. It's just that I don't want it to happen so fast. You know, I want to be long the IWM, but I don't want to buy 187 right now. So, you know, the market seems like these dispersions move very, very quickly, while S&P vol is staying very low. And kind of the S&P has been able to stay range bound, but some of these stocks have huge moves within the confines of that range bound stock market, which is pretty interesting. Pretty interesting. And I guess the only other thing I would mention, so the VIX, where's the absolute price of the VIX right now? I'll look it up in my other screen. So we know that VIX got below, got into a 12 handle. Where did we close? 1308 today, if I'm seeing that right. So there's a lot of chatter out there about how, and I want to read the Goldman note. I didn't read the information that Pat was just posting before. And we have been paying attention a little bit to a VIX divergence again, which, you know, is important information to pay attention to. But it seems like a lot of people right now are thinking that, you know, this VIX moving into this 12 handle means that this VIX has to move higher. I understand the thought process. I just would want to point out, one, is that in 2017, the VIX got down to like $10 or even below $10. I think it might have been a 9 handle at one point. And sometimes you get a VIX, you know, that can, we saw this a lot in the 2010 decade, where your VIX would be, you know, $12, $13, and people would expect that it would have to bounce, and instead it just stays stuck there for a really long period of time. So we certainly should pay attention to the VIX, and I do think at some point, and this at some point could be a trade at any point in the next 5 years. I do think at some point, just with how zero DTEs and how the options market has kind of come online, and just with the amount of overall vol selling that's been going on in the market, that there could be a trade one day, again, could be any point in the next 5 years, where you see a massive short-term move. By short-term, I mean 1 to 5 days, where we see these VIX products go up 500% in a really short period of time on just a massive vol short squeeze. I think when that happened, yeah, exactly, similar to XIV, an XIV situation when the XIV ETF blew up. I think that can happen again. I want to be prepared for it when it does happen. So I have this trade in the back of my mind. I'm not expecting it to happen tomorrow. It might happen in 2024. It might happen in 2028. I really don't know. But I think it will happen at a certain point. And I think that the key to us recognizing the trade is going to be within the options flow that we see in the GTF. Because there will be smarter players, honestly, than us, who will be the first people on top of that. Where all of a sudden, if we're trading one day and we start seeing, repeat UVIXI bull call flow at $20, $30, $40, I think that's the beginning of like a massive vol squeeze that's coming in. And if that ever were to happen, I kind of want to go like full BP UVIXI, and I think it could be a multi-million-dollar trade, genuinely. So it's something that I'm just keeping on my radar. But again, we could also see the VIX just stay. It could work its way down to $10 again. It could stay stuck in this 12, 13, maybe a little pop to 14 range for a year if it wants to. We've seen a lot of that in the past. So don't just think that a 12 handle on the VIX all of a sudden means that the VIX has to move higher, and that the market maybe has to have a sell-off with that. Though I am interested in reading this latest update from the Goldman note, but it sounds like a lot of the sell-side analysts are talking about how cheap it is to just kind of get some of that exposure on as a hedge right now in the options market if you want it, which is probably certainly true, and could manifest into something, or it could just be cheap insurance that wastes away over time, as options can do. So it's worth keeping an eye out. Yeah, and the hardest part, just reading your comment there, Dave, I'll be involved with some options trades in this thing once that is confirmed. The hardest part is I think it's going to move so fast that it's going to feel like you're chasing price, but that the squeeze is going to be so massive that what looks like you're chasing, like if all of a sudden tomorrow I found myself buying $13.25 in UVIXI when it's at $10 right now, it feels like chasing. It looks like chasing. But I think that situation happening, you're getting a trade to $40 plus on it, and at that point buying $13 in hindsight when it's over will look like a dream. So I think that we might end up having to pay up in price on it when that happens, but be willing to just put some very real risk on the trade, because I think that if it were to happen, again, we're not going to be first movers on it. We don't want to be first movers on it, honestly, because if we're first movers on it, it probably means that we're going to lose money on it 1,000 times before the trade actually works. But even without being a first mover, as long as we're not the last mover, that could be, a trade that you can make a few 100% on and get a phenomenal risk reward on it. And if you can do it with some real buying power, it could be one of those trades that makes your decade. It took years of funds putting massive leverage into the short trade to make that happen. Yeah, Francisco, it 100% did, but we're creating just more and more structured products that are layering into the market on a short vol trade that's different. It's not just like, I think I want to go back and actually re-research that XIV blow up. I was there when it happened, but I want to re-research it and remind myself everything that actually happened. It's a different setup a little bit this time, but with a similar result. Basically, is the way that I'm thinking about it. I'm gonna have to build a link to share to fully explain it in because I had to workshop it multiple times. Okay, so Dave, I'm glad it's on your radar. Good stuff. All right. Gabriel wants to know my explanation behind the VIX trade because he thought I hate the VIX. So I don't hate the VIX. I think the VIX is an awesome indicator to look at, the actual cash VIX. What I hate is the VIX products because the decay behind the VIX products is so trash. These are only good for short-term trading. And that's what this trade would be. It would be a short-term trade. It would be a 1 to 5 day pure momentum trade where the decay is not going to matter. Because what you can see, as much as I hate these products, look at COVID. Look at what UVixie did in COVID as just an example. And now it's insane. This was just COVID. UVixie was not trading at $1,000 in COVID. It's just that the product is so garbage, it just keeps reverse splitting and reverse splitting and reverse splitting over and over and over again. But I don't know how many reverse splits ago this was. You had your UVixie move from $1,000 to I'm seeing a high print of $9,700, $10,000. That's a 10x trade. Actually, I'm really glad that I'm looking at this. That's a 10x trade from COVID. I think that this trade that I'm talking about could also be a 10x trade. And what year was that when the XIV blow up even happened? Was that 2017? See if I can find that in the chart. Oh, this is such a garbage product. I can't even find it. And it's like impossible to read these numbers in 2016. We went from 466,000 on this one bounce to 850,000. This is just such a garbage product. I can't even look at this chart. But anyway, maybe my saying 300% or 400% is actually not enough. Maybe it's even more than that. It was 2018. It was 2018? Oh, it feels like longer ago. It was one of these moves. I don't know. It's hard to read this chart. UVixie went from 4,200 to 15,000. Maybe it was this. I don't know. Just garbage product. Francisco, $6 to $72. That was the XIV itself that did that? Or, no, the XIV itself was inverse, right? So it just blew up? The VIX. Right. Cool. Yeah, I don't know. Just throwing that thought process out there just because we started talking about the VIX anyway because there's so much chatter about it right now. But I'm going to read that Goldman note tonight or tomorrow morning. See what they have to say. And that's it. I think it was a good trading day today. Hope everyone did well. I think I got through all the questions. So have a fantastic night. Yeah, you could, if you have call access, Gabriel, you could do it with calls also, with lotto calls for sure. There's just low probability that my options access will be turned on. All right, have a great night, everybody. See you all tomorrow.